Hello, welcome back. So, if you were a holder of Alibaba yesterday, you must be a happy person. The stock went up almost 37%, as you can see here. And look at the chart over here. It actually was sitting at 90, oh, $76 at some point. And yesterday it closed at almost 105. So, doing pretty awesome. And it's great to see. Now, I wanted to examine some more details about Alibaba and talk about what's going on right now in the Hong Kong markets. And in order to do that, what I'm using here is the stock news module of the exclusive tool that we have for Investors Heaven. And this actually brings up some news already. This is March 17th, this is today. And Alibaba is actually up 9% right now in the Hong Kong Stock Exchange. NIO is up 4.6%. And I actually opened up the article and I wanted to read more about it. And as you will see here, the Chinese company, many Chinese companies are actually, again, reaping in the markets. And Baidu is up at about 17%, JD 11%, and Alibaba here at 9.1% is what is going on right now in the markets, and Tencent being at 5.6%. NIO is also gaining more, 4.6% here. The Hong Seng index is actually up 6.2% at the time the article was written. So if this continues, we're expecting similar moves in the US market. And at times you actually see even more explosive moves. So you tend to begin with like 10% and you may even get 17% and 18%. Remains to be seen, we don't know of course yet, but it's interesting to notice that. Now, the other thing that I wanted to examine here is the other module that we have here in the tool, which is the social trends module. And this kind of shows you what's been going on in the last 24 hours. And you will see that the sentiment keeps on growing on Twitter, on stock tweets here. And of course, this doesn't really play a role in long-term investment, but it plays a big significant role when you are looking to trade a stock, or when you are just looking to see how much of an explosive move you could be waiting on a stock. So this is about Alibaba Group Holding, of course, and you are seeing that activity in stock tweets, which is obviously the more significant of the two here, for Twitter and stock tweets, because stock tweets is just about stocks, and it really is important, because the more activity you see here, the more people enter the fray. And so you are looking at a potential trade tomorrow that's going to involve a lot of volume and potentially some rising prices again, based on also the sentiment, because the sentiment is actually the sentiment keeps on growing positively. This value here, the sentiment, as you can see here on the help, indicates overall percentage of positive activity. So a higher one means more positive activity, so more bullish activity is what it means, more buys basically. And this is a very useful module. And now you will see here on Twitter that this is actually negative here for today, but this makes a lot of sense if you think about it, because Twitter is about information and news so much. So somebody is actually posting about, look at this, like Alibaba is up 20%, 25%, 35%. So this happens once when there is like the move yesterday when the markets are open, and then slowly dissipates, and you can expect to see that. However, you see less comments and less posts and less likes, because again there's no live activity, but you see increasing interest with more impressions. So people are actually paying attention on what's going on with the stock, and impressions have increased massively, yet they are not talking too much about it so far, just because it's not really not much is happening right now in the market. So there's not significant news to talk about for now. You could expect this to grow and increase as the markets open in the US. It's very interesting and worth examining these social trends here. I think that's a very useful module for investors and traders for the most part, and I wanted to mention it. So the next thing that I wanted to talk about is I'm getting a few people asking on whether it's a good idea to trade the stock today, wait for a dip, what should I do? And I wanted to talk a little bit about this and kind of point out the stock chart of Alibaba, and for this one we're going to be using a candlestick chart. And let me actually jump to that. You will see it here. I'm using stock tweets ones, and eventually this, and I have been contemplating about adding a similar chart on my tool, But for now, we're gonna be using this one because candlesticks are very, very useful when we're looking to trade a stock, because we can much clearly see the stock movement and the short-term trend, if it's like an hour or 2 hours. It makes it much more interesting and much simpler actually to buy and sell, and we can have a line in the sand. It's much easier to trade, and it's the typical way people trade with candlestick charts. I have done a lot of trading myself as well, and it's a whole different story, and it's about sentiment 100% and trends. It has nothing to do with fundamentals. It's about the chart, and that's all it is, and it's about movements and psychology, and that's all. But if you are actually looking to trade the stock and or potentially buy it at a better price, what I would want to do is wait for the stock to open. I never wanted to be trading in the first few hours unless you are a very experienced trader who understands like red to green moves, green to red moves, these kinds of very swift moves in the markets, which can happen. I wouldn't do that. But if you are looking to buy or get into Alibaba, I would like to get it at a retrace. So for instance, a good place to buy today would be here, for example, when the stock went down at $92. So it used to be as high as, we cannot really see it in this candle here, because you see the little wick over here in this candle. This meant that it went higher but then closed lower. And so we would like to get it at these levels, which was probably around 95 over here, if I'm seeing this line correctly. Or for instance, when the stock went at 98 over here and then went down to 96, this is what I would want to buy to have a little bit of extra margin of safety. And this may not feel much like 98 to 96, but if you're a trader, this can actually be thousands of dollars, because traders, day traders, can and will trade with large batches of stocks. So they tend to buy like 40,000 worth of shares, 50,000 worth of shares, and they could be selling out of those in like 10 minutes or so. This is how it works. And as a trader, that's what you want to be doing. You want to be buying when there is a downtrend, a small short-term downtrend, of course. It's like 4 sticks here, and then you want to be buying here and have an exit maybe at this is 96 here. So have like a stop maybe at like $96, and if it doesn't reach that stop, then you can let it go a little bit and just pocket some money when it reaches probably these levels over here, 98 or 99. This way you have like 5 to 1 sort of risk to reward ratio here, a reward to risk ratio, 5 to 1. So yeah, this is of course a completely different story, and we're not doing a lot of trading in this channel. This is not what I have been talking about, although again I have done it a lot and I could talk about it. However, we're looking at stocks at a more value investing methodology. That's what we do for the most part in the channel. Maybe at some point later we can talk a little bit about this. But for now, regardless of whether you are actually looking to trade this for the short term or the long term, you obviously don't want to buy it when it's at its peak. You want to wait for a little bit of a retracement and then just buy it. That's what I would do. However, if we are looking at an investor that doesn't really care about just getting a little bit of extra dollars here and doesn't have the time to wait, I think that even buying at these levels is interesting and could prove to be a very awesome investment actually in the long run. Now, when the market opens, we probably expect another run today. Maybe it will actually open at near 120. I wouldn't be surprised based on what I'm seeing in Hong Kong. But you always have to bear in mind also that there is like the 3-day rule sometimes, where a stock that actually goes higher and higher for like 2 or 3 days. 3 days is the typical thing. Can have a little bit of a down day. So it wouldn't be surprising to me if after this insane move we see Alibaba going down like 10%. I wouldn't be surprised at all. I have seen it time and again, and it's kind of normal because there will be some selling at some point. People will want to pocket some of the gained money. Not everybody is a long-term investor. There are many traders here, and they will be looking to actually selling out of Alibaba just to make some money, not because they don't like the stock and maybe enter again. And so this is where you need to be a little bit careful and potentially look to buy at a better price and not buy when the stock is actually at its peak. Alright, so that's what I wanted to talk about in this video. So we're gonna wait to see what's gonna happen in the markets today in Alibaba, and maybe we're gonna have another video soon. We'll see. But thank you for watching this one. If you like these videos, please leave a like and subscribe. That really helps a lot. And you may want to watch the video of yesterday on what happened with Alibaba. I think it's very, very interesting. And I'll see you in the next one. Bye-bye.